Welcome to the Skoll World Forum on Social Entrepreneurship, coming to you live from Oxford, England. I'll be talking to two fantastic guests, but we'd also really welcome your comments, so keep them coming in. So my two guests here today are people working in different ways to use capital to accelerate positive change. And just to set ourselves a challenge, at some point in our conversation, we are together going to be drawing a picture to illustrate this. We've got pens, we've got a piece of paper, and we'll see how we go. We haven't practiced, by the way. This is all a bit of a risky venture, but we think it might be fun. So we'll see where we get to. And there is the Ashmolean there, which is a good destination if we produce a work of art. So our two guests. First of all, Richard Fahey, Skoll Foundation Chief Operating Officer. But of course, actually just yesterday, you stepped down from over a year as interim president of Skoll. So your day job is leading the finance and the impact measurement and as the key liaison between the Skoll Foundation and Capricorn, which is where you keep all your endowment. And you make sure that that endowment is aligned with the Skoll Foundation mission. And before that, you were in the private sector in Hewlett-Packard for over 25 years. Is that right? Second guest, Bill Orum. So you are a partner of Capricorn Investment Group, and you're also on the investment committee, so making the really big key decisions. And your focus is on public and private market strategies, asset allocation, and risk management. And one of your expertise, I was reading, is on environmental sustainability. And previously, you were a former investment banker in Merrill Lynch. Might be interesting to ask, is that correct?
That all sounds so dull when you kind of, outline.
Well, tell me something I haven't said that you think that audiences need to know.
Oh, about me?
Yeah.
Oh, goodness. My first job was I drove an ice cream truck throughout high school. So that was my first entrepreneurial venture. So that was, you probably didn't even know that.
Yeah, and what was your favorite flavor when you got one late at night and you were hungry?
This was a good humor truck. So this was strawberry shortcake, if you're familiar with that.
Okay, that sounds really good. So let me just, first of all, I think it would be really good to have a sense of how the Skoll Foundation and Capricorn work together. So Bill, do you want to start us off there?
Richard, yes.
Sorry, thank you.
Well, since I work at the foundation, it's the foundation's capital that Capricorn is managing. So we talk in terms of the foundation being the investment or the capital owner and Capricorn being the investment manager. And almost any endowment or big pool of capital has that kind of arrangement. And we started off in a very traditional way where the foundation just relied on Capricorn to make the investments while the foundation folks would use some portion of the capital, let's say 5%, for grants and other charitable activities.
And how much sort of scale of money are we talking about?
Now we're talking about $1.1 billion.
Okay, and has it gone up since the foundation started?
It has. Well, I think when I started, and we started at about the same time, probably around 250 million. And it grew, and it primarily grew because Jeff Skoll continued to make gifts of basically his eBay stock. But there was a point in time where we lost a third of the endowment. That was back in the financial crisis. I never forget that. Yeah, I got a call from Bill's predecessor saying, we need to talk.
And what happened there, out of interest? Why did you lose a third of the investment?
The financial crisis?
Okay, so 2008. Okay.
2008, 2009, yeah.
Yes.
Okay.
Yes. No, and as Richard said, our function is as the investment manager, and it started off as a very, traditional relationship, and then over time it's evolved into something that I think is, much deeper in terms of how we interact, how we think about the overall corpus, and what we're trying to achieve, really to support the foundation's mission. And that, to Richard and his whole team's credit, that was really, in part, originally driven by the foundation, this idea of how can we utilize all of our resources to drive the outcomes that we're seeking, not just the grant, annual grant budget.
So do you treat the foundation's money differently than you treat other people's money or Jeff's other money?
No, all of our clients are aligned around this overall objective of driving environmental and social impact, positive outcomes. And so there's a different relationship. We manage it as a standalone pool because the foundation has their own needs. But we only work with our partners who are striving for these type of outcomes.
Now, actually, I've been told by Capricorn that the foundation is their favorite customer.
Yes.
Okay.
Is that true? Are we,
And why is that?
Absolutely,
Why?
absolutely. Well, just
Yeah,
because
why-
of
why
Richard's
is that? Why is that?
personality.
Yeah, that's it. Because I gave him $1.1 billion.
Yes, exactly.
But the relationship, even though the asset owner and asset manager relationship is traditional, it was back in around 2005 that the then CEO, Sally Osberg, and myself, we were, at that point, the foundation was just about 4 years old. And we said, do we want to continue with this standard model? And we looked around outside and we could see other models that were emerging where the corpus, the endowment, could be used to advance the mission. And we actually started to make a few grants to organizations that were nonprofits that were advocates for that. And we made a grant to one called Ceres, which works with very large investors and corporations. And I said, well, if we're going to make a grant to these guys, we should walk the talk. And not all of their grantors did that, but we did. So that started a conversation.
And even today, not everyone
No, they don't.
Has accepted or acknowledged or integrated this way of thinking. So now we go back 15 years, and the foundation was already thinking this way. So well beyond what so many asset owners have even done in the past 15 years.
And I would say what we've done is somewhat bespoke.
Yes.
I mean, if you're going to do this, it's going to depend on the organization. And Jeff, as an entrepreneur, if you look at his entities, there's a strong flavor of innovation and entrepreneurship.
And scale.
Aspiring
for scale.
And so we've somewhat experimented and been entrepreneurial, but the investments themselves tend to go into entrepreneurs, both from the foundation's, let's call it program work, to social entrepreneurs, but the way that Capricorn invests is very oriented toward entrepreneurs.
And everyone has this, they love to have the perfect box, the perfect template, to deploy, capital for return and impact.
Yes.
But the reality is, you have certain skill sets, you have certain advantages, you have certain people that are doing the work.
Yeah.
And so everyone's going to gravitate towards different models of doing this, and that's okay.
And that's great to be doing it. Everybody would like both to get a great return and to create impact, whether it's environmental or social or governance. But when often those things aren't always in the same box, which is more important? Have you always got to get a return, and then looking where they're good returns, you look for a subset that also creates social and you go for those ones that also deliver broader returns? Or do you start with looking at the return, at the social environmental governance impact, and then look at money? Which one comes first? Because it isn't always equal. In the best world, maybe sometimes it's that sweet spot, but how do you manage when it's conflicting?
Yeah, so look, our theory is that there's huge return opportunities from leveraging these secular changes that are occurring, resource scarcity, climate change, and the need for solutions. So one thing we certainly don't view it as concessionary, right? So we don't view our activity in these areas as requiring that we take a concessionary return, or frankly that we take
Concessionary return, you mean a lower return?
Below market.
Lower return, below market, or excessive risk, well in excess of the market to achieve our impact. Because the foundation has an incredible staff.
We have
team.
capital that grants are by definition concessionary. We don't get
Yeah.
the money back. And there's kind of a spectrum of capital that we talk about with the grants. There's something like the Skoll Forum that we subsidize. So the foundation is using charitable money for an event like this. And then there are program-related investments that are also concessionary. And then we would move in to the capital that Capricorn manages. There was a point when we were going through this with our board back in 2005 where we approached Capricorn and said we would like to do more to align the endowment with the foundation's mission. And the person who was in charge at Capricorn at that point said, oh, I understand what you mean. You want us to prioritize, in some cases, impact over financial return. And we said, no, we don't want you to make that trade-off, because we think that there are solutions,
Yes.
there are opportunities for capital to be a force for good and earn great returns. And Capricorn has been doing that. I think to answer your question about where if there's a conflict, we do use negative
Yes.
screens. So there's large swaths of the economy that we avoid, like fossil fuels.
Yes.
So that's where we have to make that choice. I'd say, I think we feel that financially not investing in fossil fuel companies is a smart thing over the long term because they're not going to be around forever.
But apart from screening out all these negatives, so
Yes.
presumably firearms or tobacco or fossil fuels,
Yes.
in terms of where there's really great returns to be made, you talk about resource that other people aren't using and climate change. They're two great places where there's a lot of perfect sweet spot. But there are also a lot of other areas in the social impact space which presumably aren't there for big returns, and therefore you're not investing. Is that right?
That's correct. I mean, again, this idea of impact investing, which is not a term that we necessarily use, but everyone would love to have this wonderful framework and template that can be employed across organizations. The reality is over the last 15 years, because of our partnership with the foundation, because of Jeff Skoll's activities, because of the team that we have, we've gravitated towards strategies which address climate change really at its core. So renewable infrastructure, clean technology. And I think there are reasons for that. It's not only the people, but it's also one area where scale, innovation, technology, entrepreneurship, they all come together, and where we think we can earn outsized returns. Not just market rate, but really where we can drive excess returns, because there aren't that many participants in the market that are focused on it. So that's the other aspect, which is we're doing this in a way in which we think we're identifying value and opportunities that traditional competitors or market participants just aren't seeing.
Because you've got that expertise, which
We've
presumably
developed
is
that
becoming
expertise.
deeper, and you're hiring for that expertise.
Yeah, and it's not simple, right? It's like anyone kind of developing, a business or a strategy. You make mistakes, you grow competencies in certain areas, and over time, hopefully, you build out something that's pretty durable and resilient, and then you leverage that over time.
It's a portfolio approach. I know
Yes.
that there are several investments that these guys have made that I look at our balance sheet and it's zero value.
Yes.
And then, and then there are other ones that are 10,
Like zero.
20 times. I mean, like
Yeah.
zero.
But that's the
Zero.
nature of
That's-
taking
Again,
high-risk
I'm so
investments.
And that's why you need
happy
to,
you brought
yeah,
that
I needed
up
to
too.
point that
It's
out to the world.
Yeah.
But
That in the 2008,
yes, yeah.
it's clearly it stuck with you.
You can see why we're their favorite client.
Yes.
We hold everybody to a high standard.
I think one thing I must say that I think is, and again I attribute this to the foundation. When we talk about investors that are seeking to align their capital, more often than not, it's in one area. It's their venture capital portfolio, or it's in, some part of the portfolio. We've really aspired to do it across the portfolio. And why is that? Well, we can come back to this idea of, how we can inspire and help and, perhaps provide a template for other investors. But, not everyone needs to be doing venture capital. It's a highly specialized, unique expertise with a need for access to entrepreneurs and certain type of capital. But there's this spectrum.
Can you just explain venture capital for people who might not know?
So providing early capital or initial capital to new businesses and entrepreneurs, right? To grow the next Tesla, if you will, right? Or Facebook or whatever. Facebook is probably more relevant for this discussion. But there's this enormous opportunity, we think, across not only just the risk and return spectrum, just kind of using more financial lingo, but also the impact spectrum.
Yeah.
So things like green bonds, which are basically fixed income, so debt instruments for which the proceeds are used to finance some sort of renewable energy project and in a very direct way. There's a high probability that project will be built, that impact will actually be achieved, but it's not disruptive. It's further.
So the risk is lower.
Risk is lower, but the certainty of the outcome is much higher.
Yeah, and so you're doing that in your portfolio in
can do
order
that
to guarantee money
Yeah.
for the Skoll Foundation.
And you can
Yeah,
do
so
that
there's
across the
a
risk
spectrum
spectrum.
of where the
Yeah.
risk
Yeah.
and the venture
Yeah.
capital space is very high.
Yeah.
But there's a lot of expertise and they have great networks. But Bill can talk actually at length about in other parts of the portfolio where less risk is taken, but that capital, and there's plenty of capital in the world, is actually directed toward where it's needed for something like the transition to clean energy.
Yeah.
And maybe you could talk a little bit about the more activist approach that you've kind of discovered and
I want to hear that, but I'm also concerned that we're running out of time, and I want to make sure we draw a picture.
Listen,
good.
Emily,
I know you were trying to avoid this, Richard, but
please
you're...
draw a picture.
Yes.
No, you too. We're going to attempt in the next minute to draw a picture on how capital is used to create social change, okay? So now you tell me what is the essential element that we've got to draw at the beginning. I'm going to start. Quick, starting now.
You could start with the social change.
Okay.
Yes.
Social change.
And a long time horizon.
And a long time. And it's about people.
People.
It's about
Presumably.
people, it's about the
Networks.
environment.
And it's about the environment. Okay. I'd like you to know that you can't see on Facebook, but they are smelly
It's
pens
amazing.
here. Okay. So you want to pick up
Leveraging
a pen?
networks.
Now, the next thing I would put is
Yeah, you're
we
welcome.
could do the networks, but I think, okay, but there's something
Richard,
about...
I think you should.
You've got to have a pen.
clearly,
Yeah, I'm
Richard,
just making this
clearly,
up.
Thank you.
Okay, so go on. We'll go on, carry on. So we got environment, social, and what about where's
so
the
this
capital?
is the impact, but there's something here about business models.
Yeah, and what about the money?
Oh, you can't see, but
But you can't use words. You've got to do pictures. Okay, it's a model.
yeah. So
Richard,
this is a factory.
Oh, it's a factory. I see. I was going to draw a model, like a kind of glove. Okay.
Do a model. That's
Okay. And what else? What else do we
And now
need in
there's
here?
different types of capital,
Okay, different types of capital, different colours of capital.
and they're different.
yeah.
They're different business models.
Okay, and different ones that are all used in order to create different types of social,
Yeah, so-
environmental change.
And this may be where there's zero return.
Okay, you're into your zero return.
Because it's a grant.
It keeps on coming up.
Because it's much easier to give money away
Yes.
than invest it and make these great returns.
Yes, yes, but you're
I have
willing
to
to have a
admit
few
that.
zero in order to take those risks.
Yeah, and it's a private foundation. It's a philanthropic organization. So almost by definition, we have some capital that is given away to solve problems that aren't going to be solved by
Yeah.
commercial enterprises.
Give me a quick example.
Something with education, where it's
Yeah.
basically a public good. And the
Although
government-
interestingly, you could have financing from government, for example, who could finance work of an entrepreneur
Yes.
eventually when you get to scale.
Exactly.
So there are possibilities even in that kind of
and,
space.
and that's how it should scale. I mean,
Yeah.
so philanthropic capital can be the experimental capital for state or government delivered solutions eventually. But as a citizen, do I want the government to be experimenting with a lot of health and education innovations? Maybe not. I can use philanthropic capital to do that, and then when it's proven, the government can pick it up.
Before we finish, there's something
Yes.
I'm delighted you're getting into the drawing there, Richard. Before we finish, though, I am interested in something about what you're doing and the possibility not only of using this money wisely to help investors and create impact and help the work of the foundation, but to set an example so that people can think about their pensions, for example, or the investments of their company and start questioning. And so what you're doing could be a model. Can you talk both briefly about that?
Yeah, so we've always aspired not just to invest and partner with the foundation for purposes of their own mission, but also provide a bit of a template for how one could do this, right? Both well, we think about it in terms of how can we inspire the largest asset owners in the world.
So
The
what
sovereign
are
wealth
you
fund-
doing in order to get them to be copying your ideas?
Well, one is driving great returns, right?
Yep.
So we have to, that's a requirement. And two, being very authentic and intentional about the impact that we're having. Because otherwise, you're not going to get anyone to follow you if you're not doing what you set out to do very well. Two, we engage with them quite a bit, right? So part of it is just telling the story. Going to see the CIOs of these large asset owners who say, well, gosh, clean technology was really challenging in the mid-2000s. So just telling them what we are doing, what are the opportunities, and making the case to some extent that, we can spend all of our time in these very overcapitalized, very competitive markets, or we can try to think a bit differently about new markets, new opportunities, and some of these big trends. It's amazing. Some people just, for whatever reason, they're not aware of
And how
the
much
changes.
impact? Do you think that now there has been a significant move towards this type of impact investing since you've worked at Capricorn last 15 years?
Oh, certainly. I mean, there's been a move, but I still think there's a long runway for asset
There's
owners.
definitely a shift away, at least in terms of talk, from the idea that corporations serve shareholders
Yes.
Yeah.
first and only. And you've seen some of the largest investment managers. Jamie Dimon just did it, didn't he?
Yeah.
I mean, basically say, look, in the long term, if corporations aren't looking out for what's best for people, it's not going to end well. And we've probably gone through 50 years where corporations were told, you serve the shareholders first and last. That's shifting.
Mm-hmm.
Yeah, brilliant. Thank you so very much. Richard Fahey and Bill Orum. Really fascinating and interesting conversation, and a curious
A beautiful picture,
here.
yes.
A beautiful.
Yes.
No, I'm not sure it's going to make that.
Yeah.
In 1 hour, 45 minutes, we're going to be hearing from all the Skoll awardees this year and hear from them about their social enterprises. Thank you very much indeed for watching and for joining us.